And the reason that interest rates might actually go up instead of down in Jamie Dimon's eyes is because he sees persistent inflationary pressure
Yes, he does.
across the economy. Jamie Dimon does not seem to believe that inflation is going to keep going down. Rather, he thinks that there's structural forces at play related to sky-high deficit spending from the U.S. government, related to deglobalization, related to a lack of investment in energy infrastructure that are going to lead to persistently higher inflation figures. Dimon explained that these persistent inflationary pressures could keep prices sticky, and that if this higher rate scenario were to play out, there could be huge carnage for both equity and debt investors, as stock valuations are already at their high end and credit conditions are extremely tight. And so the takeaway here for you as a home buyer or an investor, or just someone interested in the economy and stock market, is that there's huge downside risk that lots of people are ignoring right now. You know, somehow, just because this recession hasn't hit in full force, or just because the stock market keeps going up, lots of people somehow think that the underlying fundamental factors that are destined to slow the economy are somehow, you know, not here, or that they've gone away. But they haven't, everyone. Interest rates are at a 20-year high, and they're not going down nearly as fast as people would like. And one of the reasons that interest rates aren't going down, and one of the reasons why you still have to pay 7% for a mortgage if you buy a house, is because the U.S. government keeps spending money like a drunken sailor. The deficits and the debt, they just keep going up by the day, by the month, and by the quarter. And as the U.S. government keeps borrowing this money, it's going to keep putting upward pressure on interest rates and inflation, and make it extremely difficult for inflation and interest rates to come down. It has to do with this U.S.